Hello, in this video we're having a look at wear and tear deductions. So what is wear and tear? Shortly, it is damage or deterioration of an asset resulting from the normal use of the asset. So it's not when your laptop breaks when you drop it, but rather it is the decrease in value of your laptop over time due to just using it normally. And depreciation is the reduction in the value of an asset, particularly due to wear and tear. It's standard practice in accounting to deduct depreciation as an expense, even though you're not actually physically paying this expense. It is a reduction or loss in value, and therefore one does claim it in your financial records. There are two commonly used depreciation methods, the straight line method and the diminishing value method. You can see the formulas for these two methods on screen, but in summary, the straight line method means that the value of your asset is decreasing in a straight line over time. So every year you write off the same amount until the asset is valued at zero. While the diminishing value method, you write off more of the assets early on, and the amount that you write off decreases over time. So you're going to be multiplying the annual depreciation rate by the current book value of the asset in the diminishing value method, while with the straight line method, you multiply the annual depreciation rate by the original value of the asset. So the requirements to claim a wear and tear allowance for tax purposes are that you must firstly own the asset. Secondly, the asset must be used for purposes of carrying on a trade, and that can be either as an employee or if you are self-employed, or both. And if the asset is not only used for work, then you can only claim back a deduction in proportion to the amount that you use that asset for work. And lastly, if you are employed, your employer must provide SARS with a letter confirming that you do use the personal asset for work purposes and that they authorize you to do so. Now, to calculate your wear and tear allowance, you can see the formula on screen. You multiply the value of the asset by the percentage that you use it for business, and then you divide it by the prescribed write-off period, which SARS provides for different types of assets. They provide different write-off periods, and you can access a link in the learning materials which takes you to the SARS page, which sets out the specific write-off periods for different assets. Now, looking at an example of Steph, she bought a personal laptop for 20,000 Rand in March 2021, and she uses this laptop for work purposes. She uses 20% of the time she uses it for personal use, but apart from that, she uses it for a journalism job and for her freelance design job. Because of this, she can claim a wear and tear allowance for the 2022 tax year. If we quickly run through the requirements, we can see that they are all satisfied in this case because Steph owns the asset, she uses the asset for work, and even though she also uses it for personal use, the proportion of the time that she uses it for work, which is 80%, is what she will use to calculate her allowance. And her employer writes SARS a letter after Steph asks them to, confirming that she uses the asset for work and that they authorize her to do so. If we look at the formula, because she uses the laptop 80% of the time for work, she multiplies the value of the laptop by 80% and divides that by 3, which is the prescribed write-off period for a laptop. And the result is that Steph can claim a wear and tear allowance of 5,333 Rand for the 2022 tax year in respect of her laptop. And she will be able to do that for the next 2 years after that as well, until the laptop has been written off. So that gives you a basic example on how a wear and tear allowance works. And I hope you enjoyed that. I'll see you in the next video.